In the last 239 days, I've been leveraging a quantitative trading software that has been executing trades on my behalf inside my very own brokerage account. It'll enter the trades, manage them, and exit them. And in that time period, it's taken over 2,000 trades inside this portfolio. Now, to give you context before I show you the performance of this software, I'd like to let you know that the softwares that I'm using is called the Dalio and the Gold Digger. Now, they're two softwares, but I paired them together on a singular account, so they're running in tandem. The Dalio trades a basket of currencies, and it has a hedging mechanism, so it'll take positions to the long side and also short side. If you don't know, that's what hedging is, offsetting the risk on current positions. On the other side, the Gold Digger is self-explanatory. It trades exclusively gold. Now, before you get bored, let me show you the performance of this software over the last 239 days, and more importantly, in the year of 2025. Now, this here is MyFXBook, which is a third-party service that will verify your trading results once you attach your brokerage account to MyFXBook. So there's no fluffing or screwing with the data. What's here is here, and it's verified by someone else, not myself. So since funding this account back in June 11th of 2024, the account has done 67%. And if we look at the graph, you have two lines here. Both lines resemble different things. The red line shows growth, essentially the actual realized gain or loss inside the account. So when this red line takes a dip, that means there was an actual loss reflected into my balance inside the account. Now, the line beneath that is the yellow line, and the yellow line is my equity curve. And this equity curve shows us unrealized gains and or drawdowns. As you can see, it's a bit more volatile. Each time this thing has pulled back and made a dip inside of the curve, that is showing us a drawdown. And if we look up above, you can see none of those drawdowns were ever reflected outside one, meaning on this account, I've only experienced ever one loss. Now, if we look to the left, the monthly average gain is 4.74%. Now, that doesn't mean it doesn't come with volatility. In fact, the max drawdown that this account has experienced is 23%, which means while I've had this account funded, I've experienced a 23% swing to the downside, but that actually never closed out in the account. So no, I did not take a 23% loss. The software has a very good way of managing these positions and closing out ones in profits and managing the losers very well. So in fact, I've never even taken over a 1% loss on the account, which I will show you later in this video. I funded this account with $9,954, and currently we're sitting at $16,848 in the account, which gives us a $6,700 profit. And if we scroll down, we can see the 2,566 trades that were taken. If anyone watching this is a trader and or investor, you know that taking 2,000 trades is extremely unrealistic and would consume your entire day, week, month, and or year. And the reason I say that is because none of those 2,000 plus trades were taken by me. In fact, I've been able to travel the world and work on my business. Meanwhile, this software has traded in the background for me, taking over 2,000 trades. I find it absolutely crazy and one of the greatest perks to the advancements in technology and having these softwares readily available to the general public. The profitability on this account is 75%. So out of those 2,500 trades that were taken, 1,920 of them were won. So we've only lost 646 trades, which is 25% of the trades that were taken were lost. One of the other very important metrics I like to look at when tracking my performance is the profit factor, also known as risk to reward ratio. And to put it into perspective, anything above a 1 is considered good. The higher the number, the better. And the higher the number, the more likely you are to make money on a longer extended period of time. But the definition of profit factor is how many times the gross profit sum of all winning trades exceeds the gross loss sum of all losing trades. A lot of traders refer to this as risk to reward ratio. And the way they do it is this a 1-to-1 position? Is it a 1-to-2 position? And in layman terms, that just means, am I able to gain $1 to every dollar I lose? And the higher the number, if it's a 2 risk to reward ratio, am I able to gain $2 for every dollar that this trade loses? As you can see, this could be a very important metric to track, and you want to make sure that any strategy that you're deploying inside your portfolio is at least a 1 or greater. Now, scrolling down for the year of 2025, in January we did 11.42%, in February we did 8.77%, and in March, where we experienced our first loss, which was 0.5%, 0.58% to be exact, and in April we did 3.61%, and currently in May, which it is only May 11th, we did 0.03%. And if I was to add all of that together, that gives us 23.25% gain for the year of 2025, which is crazy considering that we're only in Q2 of 2025. Now let's take a peek at 2024 just to see how we did. As you can see, every single month saw a gain on the count, the highest month performing at 9.77% and the lowest month performing at 0%. But that is not accurate because I funded the account very late in the month and it didn't start trading until the month after. So essentially, that June performance isn't actually the software trading. Now, with all that considered, if I was to take the software's performance and compare that to other asset classes, let's see how I would have stacked up. What we're looking at here is the S&P 500, and if I was to take that $9,000 and go ahead and put it in the S&P in the beginning of this year, we would have lost 3.5% on that $9,000. So in the S&P, we're down 3%. In the software, we're up 23%. Let's see how we did against Bitcoin. If I was to drop the measuring tool there, the first of the year, and drag it over to current price, we would have done 10% on the account. So the software has actually outperformed Bitcoin and the S&P 500. Now, that's not to say that I don't hold either of those assets, but I do diversify, and I like using the software because it allows me to have a market neutral strategy and a strategy that's uncorrelated to whether the economy does well or bad, because the software is taking positions both to the long and or short. And that's not to say that I don't hold any of those other assets. This is just a small portion of my portfolio that's using trading softwares to help me find an edge. And I like it for a couple reasons. One reason is it gives me a market neutral effect. So whether we go into a tariff war or into some random thing that I could not have forecasted, I know that the software is not going to be really affected to the performance of the S&P or the economy because it's trading both long and short on currencies and on gold. So it doesn't matter. I'm not looking to hold an asset in hopes that it appreciates. The other thing is, I love that it has a compounding effect. It's continuously building upon its profits inside of my account, growing it further and further. It's also allowing me to get my time back. So I could travel the world and work on my business, meanwhile taking over 2,000 trades in just under a year. Like I said, it's only been 239 days of using this software. And if you're curious how you could diversify your portfolio and get your hands on something like this, the description has a link to see if you qualify. And if not, you just enjoy tracking my performance and seeing if I'm going to make it out of the end of the year, doing good or bad. I'm here to document it all. And like always, my friends, safe trading.